Good morning, everyone. Welcome to October 1st Market Minute. I'm John Hopkins, President of Invested Central. Right now, we got the Dow futures up 55, S&P futures are up 4, and NASDAQ futures are up 14. Asian shares were mixed while European shares were higher overnight. Futures were lower ahead of the bell on Friday as the bears looked to get back in charge sooner rather than later. The market did start selling off right out of the chute with a negative bias all day long. By the time the market closed, all of the major indexes had closed lower. Today we'll get the ISM Index and construction spending at 10 a.m. Eastern. There are no key economic reports due out today. On the S&P, we've got the 20-day moving average at 1440, the 50-day at 1412, and the 200-day at 1359. The S&P closed at 1440 with support at 1430 and resistance at 1475. The bears did their best to take back the gains from Thursday, but got only back a portion on Friday. Instead, the bulls managed to hold the line on the 20-day moving average on the S&P, though barely. This week is likely to be volatile with the monthly jobs report due out on Friday. Prior to the jobs numbers, we'll get the FOMC minutes from the last Fed meeting, with traders looking for fresh clues about the economy. The bulls are going to have to kick it into high gear here to hold the line or risk losing a technical advantage. So watch for 1440 to hold here, and then 1430 last Wednesday's low. To the upside, a revisit to the 1474 level is a major goal of the bulls. Here's a bully trend fact. Many have referred to the last decade as the lost decade, as cumulative returns have been minimal. Well, that's not the case on the first trading day of the month, not always the first day of the month due to holidays and weekends. But over the last decade, the first trading day of the month has risen 77 times, fallen 39 times, and produced an annualized return of 59.83%. This is John Hopkins. I'll be back tomorrow morning with another Market Minute.